Okay, welcome everyone to the deep dive.
Great to be here.
And just quickly, this deep dive is brought to you by Access Softtech, the premier provider of digital banking solutions.
Good folks over there.
Absolutely. So today, we're diving into something we actually put together ourselves recently.
Yeah, we were looking at this idea for credit unions, trying to figure out the realistic size of business member they can actually serve well with digital tools.
Exactly. And, how that connects back to the credit union's own size and capabilities.
Because it's tempting, isn't it, to just aim for the shiniest, most complex digital platform out there.
Totally. Build it and they will come kind of thing.
Right. But what our work really underscored was, well, the challenge isn't just building a platform.
It's building the right one.
Yeah, the right one for the businesses you can realistically, genuinely serve.
So our mission here today really is to unpack that relationship. Your size, the business's size, your digital tools. Why getting that right is so critical.
And how that understanding helps you avoid, like, overbuilding.
Right. Like you don't need a platform built for, I don't know, Amazon if your members are mostly local shops, right?
Precisely. Because what a business needs digitally, well, it changes a lot as they grow.
Oh, massively. You
Yeah.
think about it. A really small business, maybe it's just one person handling the money.
Sure. Simple stuff. Mobile deposit, maybe some transfers.
Yeah. But then they scale up and suddenly you've got um, complex workflows. You need multiple users.
Different permissions,
Uh,
approvals built into the digital side.
Intricate payments, not just basic ACH.
Definitely. And cash management. That becomes a whole different beast.
Mm-hmm.
You know, what started as maybe basic QuickBooks, it just doesn't cut it anymore.
No way.
Bigger businesses, they need that real-time view, sophisticated dashboards,
Right.
automated alerts.
And integrations, right, with their bigger accounting or ERP systems.
Exactly. Things like NetSuite, SAP, pulling everything together, inventory, finance, the whole works.
And then you layer on things like potentially foreign exchange if they operate internationally.
Multi-currency accounts, maybe even multi-language support.
And security.
Yeah.
That gets way more complex too. Granular controls, fraud monitoring.
Yeah, much more advanced reporting than a small operation needs. So, okay, those are the business needs escalating.
Right.
But what we found digging into this was a pretty interesting correlation between the credit union's own size, like its assets,
Mm-hmm.
and the sort of maximum size of business member they tend to realistically serve effectively.
Okay, so give us an example.
Well, roughly, say a credit union with around $100 million in assets, they might realistically top out serving businesses with maybe $2 to $3 million in revenue.
Okay. And that scales up.
It seems to. A $500 million CU might be looking at businesses up to, say, 10, maybe 15 million. A $1 billion CU, perhaps 25 to $30 million.
Right. And the really big ones, like $5 billion.
Maybe up to 75, even $100 million in revenue for their business members. Now, these aren't hard and fast rules, obviously.
Sure, there are exceptions.
Yeah.
But it gives you a ballpark.
Exactly. It gives you a framework. And this is where our analysis pointed to something really fundamental.
Okay. What was that?
Well, it strongly suggested that one of the main reasons a business chooses a financial partner, it's about managing cash flow.
Access to capital when they need it.
Bingo.
Yep.
Access to capital. So that realistic limit on the size of business you can serve.
Yeah.
It often seems to tie back most directly to the maximum size of the line of credit, that flexible funding.
Right, for short-term needs.
That the credit union is actually able or willing to offer.
Okay. So it's not just about the digital bells and whistles.
No.
It's about building a digital experience
Mm.
that supports the relationships you can actually sustain financially.
Particularly through lending, like those lines of credit.
So if your lending realistically caps out with businesses under, say, $5 million revenue,
Then you probably don't need to invest heavily in, I don't know, foreign exchange features or super complex ERP integrations for systems only huge companies use.
it would make sense.
Exactly. The scale of the business member you can realistically attract, and more importantly, serve fully, including lending. That's what really dictates the necessary features in your digital platform.
The digital strategy has to be grounded in that operational, that lending reality.
Yeah. Not chasing features for businesses you just can't serve anyway.
Okay, so the core insight here, wrapping things up from our work,
Mm-hmm.
it seems pretty clear.
Mm-hmm.
A credit union's size, and especially its lending capacity, things like LOCs,
Mm-hmm.
that really sets a practical ceiling on the size business member you can effectively bank.
And your digital offerings have to match that realistic segment. You're building for your members, not, hypothetical giants.
We saw how those business needs just explode with size workflows, cash management systems, global stuff, security.
Right. The business scale drives the digital complexity needed,
Yeah.
but the CU's capacity, that defines which scale of business is even in the realm of possibility for you.
It really is about right-sizing your digital ambition to fit your actual capacity and your members' real needs.
It is. Which leaves us with a final thought for you, the listener, to chew on.
Okay.
If that limit on the size of business you can serve often comes down to your maximum line of credit offering, what does that really tell you about the fundamental driver of these business banking relationships?
Yeah.
And maybe more importantly, how should that core lending reality shape, well, every single part of your digital banking strategy going forward?
Something to definitely think about. Until next time on The Deep Dive.